This is Real Estate in Edmonton, helping you navigate buying, selling, investing, and living in Edmonton. Hosted by Realtor Devin Gray and professional broadcaster Tracie Gray.
Hi, I'm Tracie, and welcome back to Real Estate in Edmonton, where we talk real estate and real life. This podcast is a little bit different today because we are going to take you inside Mogul Mastermind. And that's why I'm wearing a Mogul's hat right now, because Mogul Realty Group, which is the company that started up Mogul Mastermind, has a group of women working with the company that we call ourselves the Moguls. Now, the guys want to do the same thing, but Mo Guys just sounds like the lunch special at Oodle Noodle. So we have to come up with a better name for them. And in the meantime, we are going to take you inside Mogul Mastermind. It's a monthly meeting where we talk about real estate investing. Also, it's Edmonton's premier real estate investing community who's a part of this. Last night, I had the pleasure of emceeing another fantastic event with real estate investors joining us both in person and online. We had an incredible lineup of speakers covering everything from Edmonton investment opportunities, rent-to-own strategies, and creative financing with experienced real estate lawyers. Now, one of the highlights every month is Devin Gray's Edmonton Market Update. And it's not just me being biased because he's my husband, but there are people who come to Mogul Mastermind every month specifically just to hear his report, and we've got it here for you now. Now, headlines are talking about a possible Canadian recession. Devin explains why Alberta's economy is still more resilient and what that could mean for buyers, sellers, and investors. So let's head to Mogul Mastermind. First, you'll see a quick clip of me hosting the evening, followed by Devin's full June Edmonton real estate market update. Here we go. So welcome to the sunshine. Welcome to Mogul Mastermind. I'm Tracie Gray. And for those of you just joining us here online and in person, we are so glad that you guys are here. Hello to everybody who's online. I'm on the radio and TV. I'm also co-host of the Real Estate in Edmonton podcast, real estate investor, and most importantly, tonight, I'm your host and MC for Mogul Mastermind. So thank you again for joining. Oh, thank you. I did a little curtsy. Oh no, stop. No more. No, really. No. I didn't hear from you in the back. No, I'm just kidding. Okay. All right. So to get into our evening here, if you were wondering how I got involved in Mogul Realty Group and Mogul Mastermind, I am a real estate investor, and I also married a realtor, which apparently is the gateway drug into doing real estate investing. So if you wanted to know what causes that, now you know.
So I'm here to handle the June market update for the Edmonton and greater Edmonton areas. So if you do check out the Realtors Association of Edmonton, you'll find a graph like this. The information does come out on the first couple of days of the following month. So we probably will see June's information on July 2nd or July 3rd. But this is the most current information we have right now, which is the May stats. Key indicators. Well, first off, I wanted to say, so a lot of realtors, myself included, we like to update market updates and various things like that, and we'll talk about how we think the market is. And so I was watching another realtor who used an interesting word to describe the Edmonton spring market. He called it weird. And initially I thought, well, that's not really professional. But then I thought more and more, and I thought, it is kind of weird. But weird, and lots of people disappointed and confused and stuff like that. And I think a lot of times that's just, that can be encapsulated in basically saying that we're more or less in a balanced market. Because as I was also saying to Brandon back there from Bar LLP, balanced markets are when everybody's disappointed. When you have a seller's market, you clearly have happy sellers, but disappointed buyers. Conversely, you have disappointed sellers in a buyer's market. But everybody's kind of Not really sure what's going on. Certainly at the Mogul team, we're experiencing and being involved with some overlist prices, multiple bids. I've been in 2 in the last week. But we've also got properties that are sitting there and we're doing significant price drops and we just can't capture the imagination of the buyers. And then on the other hand, too, we're running into sellers on the buying side. We're running into sellers that are very firm on their price and other sellers that are just really anxious. And you throw in a lowball offer and you're kind of surprised at what they come back with. So I thought weird was a good description for the Edmonton market right now. In regards to the actual stats and what MLS is saying, so for total sales, we are up slightly from April, but we're definitely down from last year. And we really started to see the apex of the Edmonton market from a seller's market standpoint last spring. And then things started to slow down. Overall inventory is also up from last month and also last year. For most of the spring, now again, the Realtors Association of Edmonton will talk about 3 months of supply as basically being roughly a balanced market. And through the first part of the spring, we were definitely underneath 3 months of inventory. As you can see on this graph, we now just bumped up a little bit above 3 months of inventory. We're at 3.1. New listings are also up big time from April and about the same as last May. And inventory, again, is rising sharply year over year. We're at 24% higher. So it's definitely more of a balanced market, certainly a little slower than it was last year. Pricing and days on market, all residential average prices are at about $492,000. Single family homes popped up over $600,000 as an average, pushing 605. All residential days on market, about 36 days, single detached, 33 days. And then you can see the apartment style condos, which always are the lagging style of property in pretty much every market. They're sitting at 49 days on market. So a little bit of every month, the REA board chair will talk about just providing some information in regards to what's going on in the market, and basically just again talking about how there is more inventory, more choice for buyers. So sellers really need to be a lot sharper in regards to how they prepare their homes. You can't keep that Tim Hortons cup on the kitchen table while your photographer's going around. You actually got to do some cleaning. Maybe stage the property, make sure you do some minor renovations, and great selection for buyers. So that's basically what she's saying there. Home price index, a great tool for realtors, for any client that's willing to take some time to look at this. Year over year, for this is for the composite, so basically all types and styles of property in both Edmonton and the greater Edmonton area. They're down ever so slightly, 1.8%. You can see how things slowed down last fall, and then we got into the typical spring pull-up, and now we're starting to see things leveling out as we move into the slightly slower summer months. This is taking a look at the last 2 years. Over the past 2 years, prices are up 6% from 2024. And then if we look at 3 years ago, prices are up 15%. So for people that decided to hang on to their properties for the last couple of years and maybe look at selling, yes, it might seem in this current spring market to be a little bit more challenging, but prices still are quite elevated from where they were 3 years ago. And if we look at single family homes, basically we are flat. We are flat of where single family homes, again, this is composite. This is single families, but across the entire city of Edmonton and the greater Edmonton area. Basically, we kind of apexed in June of last year, and we're at that price now, again, for single family homes as we start to move into the leveled off summer. We do always like to look at Calgary stats. Calgary is the economic juggernaut. Edmonton follows Calgary. Calgary really is a bit of a tale of two different types and styles of properties. They're still very much in a seller's market when it comes to single family homes, but they have an abundance of row houses and apartment style condos. And that's causing, depending on the purchaser, it's either still a very competitive market for a buyer. Sellers are happy with prices that are being sold. And then on the apartment style condo side, it's definitely a buyer's opportunity there. So this is from the chief economist of the Calgary Real Estate Board. Shift in supply is being felt in the market. More supply choice in the new and rental markets created more competitive environment for potential buyers. Still dealing with the reduction in immigration that's really has affected, you turn the taps off from 1 million people a year down to 350 to 400,000. Every single market across the country is going to feel that, and that would include Calgary. Looking at inflation, so inflation jumped higher than was anticipated. It's back up to 3.2. Obviously, that's being led by energy prices. Energy surged 32%. Also up is air travel, obviously, because they run on fuel. And food costs also climbed because food needs transportation to get that to market. So everything, again, centers back to what's going on around the world with high energy prices. Alberta inflation really shot up to 3.7. That's up from 3.2. And of course, that's energy is the primary culprit. Gross domestic product. So of course, there's been a lot of discussion about Canada falling into a recession, which is 2 negative growth quarters. So what they are predicting for the rest of the year in Canada is 0.8% growth, whereas Alberta is still a robust 2.6%. Bank of Canada did hold their interest rate to 2.25%. They're obviously watching the market very closely, and we'll see what happens. As a couple of wise people told me, sometimes not making a decision on something never hurts you. So I'm sure the Bank of Canada is probably thinking that we'll just kind of keep holding pat here and kind of wait to see what happens. Employment update. National employment did fall to 6.6%, a surprising 88,000 new jobs. They weren't expecting that as well. Construction led the way with the most gains. And also some encouraging news because there's a lot of people watching youth unemployment. So youth unemployment, while still high, it did drop to 13.4%. The labor market, provincial unemployment also at 6.6%. Edmonton is at 7.1% and Calgary is at 7%. And of course, that's an interesting both sides of the story in terms of if you're somebody looking for work, there's potentially not a lot of jobs out there. Conversely, if you talk to a business owner, they actually love this type of market because they can pick the best of the best. They can take their time and really, really dial in. They're going to get a lot of applicants. For those of you that know Patrick Francie from the Real Estate Investment Network, I remember him talking about this a lot during tight labor markets where there's not a lot of people looking for work. The mindset was, do they have a pulse? Then we'll hire them. And we'll figure out how good they are once they actually start working. So it's actually, depending on how you look at it with unemployment, obviously there is some concern, but on the other hand, it can be looked at as a little bit of a good thing, provided it doesn't go up any higher. The next few slides, it's just an interesting, I found this interesting in regards to, so who's working, how much are they making, and where is the employment growth? And so this first slide just talks about, so who's making what, and what's the highest paying occupations. So mining, quarry, and the energy sector is the highest in Canada, making $2,500 a week. Next is utilities, then you drop down to information and cultural studies, professional, scientific, and tech, just making just under 2,000, finance, insurance. Now, food services, I think there should be an asterisk there because this obviously doesn't take into account all the tips they make. But clearly from a wage standpoint, they basically are bringing up the rear. When it comes to where people make the most amount of money, this seems impressive. However, I also know, we all should know that it's very expensive to live in the Northwest Territories, Yukon, and Nunavut. So these salaries are more or less a necessity because of how expensive it is to live there. But Alberta is number 4, and out of the actual provinces, Alberta basically is number 1. Not surprisingly, Ontario and BC are coming in 2nd and 3rd behind Alberta. So Alberta continues to be out of the 10 provinces, continues to be the highest weekly wage earners. Sector momentum. So what sectors are growing and what sectors are declining? Administration and support services. There's a rising demand for business services as the economy grows. Also waste management and remediation services. For anybody that knows, who's here has demoed a house and had to deal with asbestos? Yeah, that you talk about how much is that? Like that's a license to print money. That's criminal. Yeah. I wouldn't be surprised if the mob's in it. I mean, like, who cares about drugs and prostitution? Let's get into remediation. Yeah, that's right. That's right. Anyways, two sectors declining. Their service industry and arts, entertainment, and recreation. Obviously, with this, these people's discretionary income is reducing, and so less people are going out. They're watching their pennies, and so it's becoming harder and harder to keep a job in that sector. The pendulum swings. Canada's population shrinks again. This was at one time a pretty wild, unique anomaly, and now it's becoming a regular situation. Canada's population is shrinking, and this is the first time in the history of the country that we are seeing a declining population. For the third consecutive quarter, and basically from January to April, we saw 55,000 more residents leave the country. So year over year, a contraction of 0.5%, as opposed to a 3% growth in 2024, when we saw 1.2 million residents come to Canada. So that's quite interesting. However, the only province in the country that continues to grow, we're living in it. In 2026 alone, we added nearly 9,000 people. Alberta's population projected at 1.1% growth, along with that 2.6% GDP growth. So it feels slower here, obviously, compared to the last couple of years, but we still have growth, and that's hugely important. And then here's just an easier way to look at it. You can see we're basically, over the past year, Canada has seen 188,000 people leave the country. The biggest loss is Ontario. Biggest growth is Alberta. You've got the Northwest Territories, Saskatchewan, and Alberta that more or less are basically flat. So Saskatchewan, Northwest Territory, Prince Edward Island. And then on top of that, interprovincial migration. So we are still seeing people moving here from other provinces. And so we are at 6,000 people from other provinces, and the largest exodus is Ontario. Second is Quebec. And then you also, actually, surprisingly, you saw a little bit of growth in BC, because BC is also looking at a lot of overall population decline. The energy workforce. So a lot of people wonder, how big is the energy industry in Alberta? How many people work in oil and gas? Well, there's 161,000 people that work in Alberta. More impressive, that's 52% of everybody in any energy sector in Canada. The next highest is Ontario, but that's with electrical power. A couple of little other interesting notes: 75% of that workforce is male, and 95% are full-time positions. So it just shows you, this isn't, casual work. It's not part-time. This is a major industry for Alberta, and vitally important for us. The biggest potential disruptor, as with pretty much any industry, is artificial intelligence. And that quietly continues to be something that, despite the fact that everybody knows now what ChatGPT and Claude, if you're from the East, likes to talk about, it's artificial intelligence is really something that every industry needs to keep an eye on. Alberta economic expansion. So, how is Alberta doing when it comes to working with the U.S.? Well, we've seen non-U.S. exports surge by 22%, and that's offsetting a 6.1% decline in U.S.-bound exports, 52% increase in energy exports to international markets. So we definitely are, obviously we're having our current challenges with the United States, but we are a resilient population, and we're going to go and find customers elsewhere. And this information certainly shows that a lot of energy companies are being successful in Alberta. The luxury market is bouncing back, but not where you think. I'm sure that you would probably think Vancouver and Toronto are leading the way, as they always do with the luxury market. Not so. That's actually in decline. In fact, the largest decline in the luxury market is in Hamilton. It's dropped 21%. Calgary, Edmonton, Saskatoon, and Ottawa each grew their luxury markets by over 10%. Luxury in Edmonton is defined as any property that is 1.5 million or above. And in the first 4 months, we saw 65 sales in Edmonton. I'm sure Bar handled all of those. Nearly 48% growth year over year. Saskatoon, $900,000. And so I've got a slide in a little bit here, kind of reinforcing what's happening here. But in the first, before we get to that, a lot of people understand and know what's going on with the challenges that the downtown have. But I thought this was an interesting slide in the fact that in the downtown, from downtown to basically 124th Street, there's 5,500 businesses employing 144,000 people in the downtown core. That is far and away the most concentrated amount of employment. So when we talk about the importance of downtowns in any city, and especially downtown in Edmonton, and people talking about, oh, downtown is dead and nobody's going there or anything like that, this says that there is a lot of stuff going on. And how many people potentially, as we also are understanding about how high gas prices and various things like that, how many renters that work at these 5,500 businesses, how many would potentially like to live in a rental somewhere close to downtown? So something to keep an eye on and or just keep in mind when you're shopping for rentals. When it comes to the downtown core, we talked about highest concentration. If you are focused on a renter that is more in the industrial sector, Jasper Place and obviously the Southeast Industrial Parks are probably the best places to focus on. When it comes to retail, Old Scone and West Edmonton Mall, obviously serving the entertainment and events and stuff like that. We talked about luxury, and so this is an interesting thing that's going on in the Old Glenora area. There is a high-rise being built, all luxury apartments or condos. The lowest, the cheapest is 2.7 million. The highest is 9.5 million. It's an $80 million project. I believe it's supposed to be done in 2028. The penthouse is already sold. There's already 6 units remaining. I believe it's it's Autograph that's behind this, and they felt that we were lacking in the luxury condo market, and they're extremely happy with how sales are going in this, and success follows success. So we wonder whether or not there's going to be more luxury condos being built in and around the downtown core. Looking at the rentals, again, from rentals.ca, if you own rental properties and you don't go to this website, I recommend you do because it's got some great information. Most are down year over year. Edmonton 2.6, Calgary 4.4, Halifax is up and Winnipeg is up, obviously because renters are chasing affordability. The less expensive real estate markets, that's where they're going to go. Average asking price, you can still see Alberta is below the average. Nova Scotia has actually overtaken BC. I thought that was interesting. Annual change. So a great slide that I always like to point out. So as you can see that we are down in Alberta over the 3-year average. We're still up 8.9%, but you can see Saskatchewan, which is also starting to cool. That had a huge growth increase, and then same with Nova Scotia over the course of the past 3 years. 6 largest markets, Edmonton, and this is the 3-year average. Edmonton is the only one at 10.9%. You can see the rest are down. Calgary 3-year average 6%, Toronto 11, Vancouver at 14% down. Highest average asking rents. I bring this slide up all the time just to again show why people continue to move here. It's because of affordability. These are the top 25 markets outside the 6 largest markets like Toronto, Vancouver, Calgary. There's not a single Alberta town on this slide. It's only BC, Ontario, Quebec, and Nova Scotia that make up the highest average rents. However, you have Fort McMurray, Lloydminster, Medicine Hat, and Red Deer leading the lowest average asking rents. Also Grand Prairie, Lethbridge, Airdrie, and St. Albert. So again, why do people continue to be moving to Alberta? There is a lot of inexpensive opportunities to take out a rental property if you are a tenant. And the fastest growing rents, Kingston, for the first time in about a year, has dropped to number 2, but you've got Lloydminster on here. I've actually had quite a few conversations with people about Lloydminster. Lloydminster has very low average rents, yet asking rents are continuing to surge ahead, and there is a lot of things going on in Lloydminster. That's certainly a city to watch. So some key takeaways. Inflation risk, it's elevated. It's going to be continuing to be a challenge, especially as the war in Iran continues on. A rental correction is ongoing. Rents have declined for 20 straight months in Canada. And we had some good conversations about where rent's going before we started here. Alberta's continued resilience. If you're going to be any place in Canada, Alberta is the place to be. Hopefully all the slides and information I showed you here shows that. And then the bank of policy continues to be uncertain. They're going to be watching things. They seem to be getting attacked on both sides. It's going to be interesting to see what happens on that situation with the Bank of Canada interest rates, along with being affected by everything going on in the world. So as Tracie mentioned from the outside, her and I host a podcast that drops every Thursday at 3 o'clock. You can catch it on YouTube and Spotify and anywhere you catch your podcast. It's called Real Estate in Edmonton, where we talk real estate in real life. So please check that out. Woo-hoo. And I really appreciate your time. Thanks very much and enjoy the rest of the evening.
Devin Gray. Woo-hoo. Okay, I hope you enjoyed this special look inside Mogul Mastermind and found Devin's June market update to be valuable to you. As you saw, that was just one part of an incredible evening. We also heard from Adrian Nedlek on a great investment opportunity in Edmonton, Mitch Peterson, who was talking about rent to own and how it can create opportunities for both investors and home buyers, and Brandon K. Hands and Richard Bell from Bar LLP, who shared their legal insights on creative financing strategies like vendor takebacks and agreements for sale. We actually had a third lawyer that was lined up to speak, but he just quit law to become a dog breeder. Turns out he preferred boxers over briefs. Okay, I promise their real estate advice is better than my jokes. But the full event is available, bad jokes and all, inside our Mogul Mastermind school community, which is spelled SKOOL, and it's free to sign up. If you'd like to learn from experienced investors, stay on top of Edmonton's market, and connect with an amazing community, we'd love to have you join us. We meet on the last Wednesday of every month, both in person here in Edmonton, and you can connect from anywhere online. If you enjoyed this episode, please like, subscribe, and share it with someone who wants to stay ahead of what's happening in Edmonton real estate. Thank you so much for watching, and we'll see you next time on Real Estate in Edmonton, where we talk real estate and real life. I'm Tracie, that's Devin. See you next time.